Good morning. I'm looking at a play for Microsoft. I think we may have an opportunity to jump into Microsoft this morning. So let's take a look to see what's going on with Microsoft. Um, One of the things I like, I just want to see if they have earnings coming up anytime soon to see what's causing. I don't see earnings coming up. They're just to be on a nice little they have earnings next week. Okay, excellent. So they have earnings next week, and that may be the explanation for some of the movement that I'm seeing with Microsoft. So what I'm going to do is the reason I like Microsoft is because when I look at the daily, I see it's in a squeeze, and I see that it's starting to get upward momentum. You see these three blue bars? That's nice upward momentum coming out of the squeeze. Um, and you can see that with what's going on. Also, what's nice is that while it closed at 215 on Friday, I could see that in pre-market it's already up 4 points. So the play that I'm going to make is probably I'm probably going to have to extend it a little bit because the price is going to be a little more expensive. So let's throw some Fibonacci's on here to develop some support and resistance um, levels. Okay. So it's moving its way to the 61 retracement. Let's just throw some uh, shorter time retracements in here. All right. So we see that it had on Friday it just rampaged through the 50% retracement, and right now in pre-market is at 219. So this is where it closed Friday. This is the activity that's happening. If you were buying shares right now, it would cost you. People are bidding in the 219 range. So right now it's steady trading above the percent retracement. Um, Anytime you have a gap up like this, you should expect some type of pullback at some point. So there should be a pullback at some point. Case in point, you see this here, you see this gap up, it's followed by a pullback. You see this gap up, it's followed by a pullback. So there may be a pullback, so I probably should be able to get my price at some point. But I still like this because there's strong upward momentum. I'm looking at playing this to the 100% retracement, right? So that means I'm going to set up a trade where my sweet spot is I'm playing it for 232, and I'm going to give it some time to work. So I'm going to do one of my new favorite go to is a butterfly, and I'm going to take this out to next month, just to next month's option chain, because I want to give it some time to work. I don't even think I need it's in a squeeze. I don't think I need that kind of time because it's in a squeeze. So let's just take a look at some earlier option chains. Today's the 12th. I'm going to go to, let's see, I'd like to give it 3 weeks. So I'm going to go to the November 6th option chain. And they are, the first thing I look at is the implied volatility. The experts thinks that this stock is going to increase by almost 17 points from the current price. So the current price right now, let's ignore the pre-market. The current price is 215. So the experts are saying, you know what, this stock can get up to 231. Maybe the 100% retracement is not a good idea here because I was looking at 232. The experts are thinking 231. Let's see, what does the 13th looks like? Okay, so the 13th, the experts are thinking another 18 points. So 18 on top of the 215 would bring me out to what, 230, 240, 233, sorry. So it's going to bring me out to 233, and I am looking for 232. Still a little tight for my liking. So you know what? Maybe we do land on the maybe we do land, we stick with the monthly. That's 21 points. 21 and 15. That takes me out to 236. So the experts think it can get to 236. I just wanted to get to 232. So I'm going to structure a butterfly trade that'll get me to 232. And honestly, in a perfect world, here's the 235 here. So if I right click on that and I say buy, and I'm going to say a butterfly, I'm going to say I'm going to buy 230 calls. I'm going to sell, so in this contract right now, I'm set up. You see, it's only 36 cents. It's probably going to be up a little more this morning because of pre-market. I think I'll move it because I want to do this trade. I'm going to move it up to 40 cents. Okay, I'll move it to 45 cents. And right now, I'm buying 10 calls at 230. I'm selling 20 calls at 235, and I'm buying 10 calls at 240. So the way this trade is structured, I make money towards the 235, and I make money on both sides. Let's just look at this one more time. So guys, I'm going to structure this based on the 230. I don't want to go past the implied volatility. So let's come here. Let's do that based on the 235. My price is going to be a little different. Okay. I mean, on the 230, so that's better. So 225 to 230 to 235. And if I look at the risk reward, that's still sweet. For $300, if I get the max profit, what is this? This is for $300. I can get 46. Was that like 13 to 1? 14 to, it's like 14, 15 to 1. That's like 15 to 1. Who wouldn't take that deal, right? So I'm going to look to do that trade. Um, and this is the trade I'm setting up. I'm playing this out to the 100%, just a little short of the 100% retracement. I'm looking to take this position on Microsoft. This is a play going into. This is a play towards earnings. I don't expect to be in this trade by then. I'm hoping that it can get to the 230 sooner. This is the trade I'm doing. Join me if you like.